Well, it is Wednesday and it's November 21st. We're going to be talking about two things. One, portfolio overview, and two, where I think the market is headed for the rest of the year, maybe early next year. First of all, I gained $800 in the portfolio valuation today. It was a little bit more, closer to 1,000, but then there was a drop. EXK dropped after markets pretty substantially. Let's take a look at that chart. It went all the way to $2.04 and then back down to 195, which also affected my options. So for the week, it looks like we're up 0.17%, which translates to $73 for the week. It got pretty scary, especially yesterday. Here we were down at 41,400. I did not make a video, couldn't find the time or energy, so I'm making one today though. Um, If we take a quick look at some of the stocks and funds, for the most part, everything was flat. The biggest winners were C-SPAN here. The Russian market was up 3%. Um, I believe uranium had a good day. Gold and silver miners had a decent day. Uranium Energy Fuels was up a couple percent. URG 4%. Chemical zero point 0.7. The uranium ETF 1.62. Apple is fairly flat. Spotify up a couple percent. China up 2%. Switch 2%. JD lost a lot of money. So did Alibaba, but JD lost a lot of money yesterday. So this 4% gain doesn't seem like much now. Um, Same thing with Alibaba, pairing some of the losses from yesterday. And this company, Stone Co, lost like 12% last time. Now it's up only 5. So everything just kind of pairing losses a little bit. The market was about flat, tiny bit of gains on S&P and Nasdaq. I think that was exactly flat. It was like 0% gain or loss. So this is how the portfolio performed. I guess it was a fairly okay week considering how the market behaved. If we're judging the market, if you're judging this by the market, did make some moves yesterday. Um, on the lows, I bought 9 shares of EDF, which is a emerging market fund that returns a lot of money. I bought 1 share of Apple, and I bought 70 shares of FAX, which is the Southeast Asia fund, and that took me to just $20 outstanding, fully invested at this point, and I'm swimming naked, which brings me to my next topic, which is where I think the market will be headed. And I think unfortunately it has some more room to go down into the holidays. This is the only hedge I own. This is SH, which is just a broad market hedge. Sorry, short ETF. I have $600 in it, but it moves about similar percentage as the market. So the market moves down a little bit, this moves up a little bit. Um, and I'm bullish, and I have I'm going long on every single other trade. So, I mean, I've sold a few calls here and there, to help offset some of this, but it's nowhere nearly enough. So I'm looking pretty long, which is kind of scary, and I think the market's going to actually continue going down, which is counterintuitive, right? Like, why would I be long if I think the market's going down? But I think the downside is limited, which is why I haven't gone short, because I'm going to be looking to maybe convert some of these trades into some more buying opportunities, because I think Apple here is actually kind of becoming a pretty good buy at 176. And I bought some at 150 and I bought some at 200, so 176 is good. And so I might just convert my that SH into a few more Apple shares as it's going down into the New Year's. I don't think it has much room to go down, maybe another 5-10%, but that's nothing in the long term. And the reason I think it's only going to drop that low is because I believe that the central banks especially the Federal Reserve, will come underneath the market with some talk, and the market's going to buy it. And you don't want to ever bet against the central bank because they're controlling the very instrument, the very measurement that you're measuring your stocks with, right? They're controlling the ruler that you're measuring things with. So it's kind of difficult to beat that. Um, of course, you can buy yourself some things, some other measuring instruments, but they're just not in fashion. Things like gold, you can do that. You can buy other currencies, right? But it's just dollars crushing the currencies right now. Other currencies. You can buy debt in other currencies, debt denominated in other currencies that you think they're going to appreciate versus the dollar, but that's so hard to do considering, the US is one of the largest, it was the largest economy, and it's perceived to be the strongest economy, most secure, and people around the world believe that the US is going to do the right thing at the end of the day, and so it's the most widely used, it's the reserve currency, so how are you going to go against it? It's very difficult. So I think the market's going to go down short term, probably. It's going to be a good opportunity to load up on some stuff, though, especially as I mentioned in my previous vlog. I think silver is a good speculative kind of trade that you may want to take. Now, having said that, I want to do another educational type of video with my thoughts on uranium, which is my other big bet here that I'm speculative bet that I'm trying to make some money off of. Um, this is the uranium ETF. It's a really slow climb here, if you can see, but it might have some more downside to go. We don't know. It's really not for the faint of heart, and I'll discuss my reasons behind uranium later. But for now, I think the market's going down short term. I think the central banks are going to save it in the longer term, and I think it's going to go a lot higher in the very long term. Um, so why do I think it's going to go a lot higher in the very long term? Because there's going to be massive expansion of credit to try to stave off all these defaults that are going to be occurring here. And I think that the banks, the Federal Reserve, will act a lot more swiftly than it did the previous time because it doesn't want it to get as bad as it got in 2008. So they're going to preemptively pull the trigger. They're not going to wait like for 2 weeks before they do anything and just let the market free fall. I don't see them doing that. They're going to come out. It's like unexpected developments and unexpected tightening or whatever their language is going to be, and they're going to reverse course. They're going to introduce more liquidity. They're going to buy stuff up. They're going to, you know, expand credit. They're going to lower interest rates, blow up their balance sheet if they need to. They're going to do all kinds of things to stave off this downturn. I just don't think it's going to be nearly as deep as 2008 recession. Okay, so those are my thoughts. Maybe look for a uranium video in the future. I hope that helped a little bit and updated you on the portfolio. Have a great Thanksgiving if you're listening to this on Wednesday or Thursday. And I will make my next video probably on Friday, if not on Monday. All right, that's it for now. Peace out.